Hello everyone, happy Thursday and welcome to lesson 8 of our New to Investing series. My name is Alex Coffey. I'm a senior trading and derivatives strategist for Charles Schwab, as well as the host of Next Gen Investing on the Schwab Network. For those who aren't familiar with Schwab Network, it's produced by Charles Schwab Media Productions, and it is a separate but affiliated subsidiary of Charles Schwab Corporation. Should also mention that today's webcast will be a moderated discussion, and my colleague Scott Thompson will be in the YouTube chat to help answer for those who are catching us live here on this Thursday afternoon. Today's session is called How to Navigate Hype and Headlines, and throughout this series we have discussed how the market works, how to get started, diversification, building a portfolio, and managing risks. Today we're going to bring those ideas together, because once you start investing, you'll quickly realize there is no shortage of information competing for your attention. Whether it's headlines, social media, analyst opinions, earnings reports, and market commentary can all influence us as investors and how we think and how we feel about our investments. The goal is not to ignore those headlines, though. It's to understand what you own before reacting to what you hear. Before we get into the presentation, though, there are a few important disclosures as well as some housekeeping items that we must attend to. Today's discussion is for general informational and educational purposes only. Nothing we discuss should be considered investment advice or a recommendation. I should also say investing involves risks. That can include the possible loss of the principal that is invested. And when we operate within the charlesschwab.com web platform, for some examples towards the end of our presentation today, just want you to know I'm going to be looking at a demo experience, and it can be different from the live trading platform experience. Before we jump in to today's lesson, let's look back at what we've covered. We started with the power of starting early, and we learned how the stock market works, and those were really important lessons to kind of build the foundational framework. One, to kind of illustrate the power of compounding, and one to really understand what this whole world of finance and the stock market really is. From there, we discussed getting started with the web platform, potentially making a first investment. Once you've made the first investment, diversifying beyond just maybe one single investment into building a full portfolio. Last session, we focused and talked a lot about risk as well as reward and how those are two sides of the same coin. And that really builds directly into the discussion topic for today, which, as I said, is how to navigate hype and headlines. Because many investing decisions, especially the emotional ones, start with something we read, something we hear, or perhaps even see directly in a headline. The challenge isn't learning how to separate that information or the things that drive us to make decisions from emotion. It's more about trying to learn how to look at those emotions and not let them be the driving force to our decision making. And so they are separate in terms of the information and the emotions, but it's all there. And trying to be emotionless and ignore headlines, both of those could be kind of frivolous in terms of our journey. So that's what we're going to focus on today. We'll start by reviewing some sort of stock basics just to kind of get everything squared away and ready for this discussion when we dive into the platform towards the end. We're going to discuss some risks as well, some of the things we discussed last week, just quick kind of recap on those and how they fit into this. We'll then look at how we can use those risks to help us evaluate market headlines maybe with a little bit more effectiveness. And then towards the end, as promised, we'll pull up the platform, we'll look at some names, maybe some ones that we've looked at throughout the previous 7 sessions and kind of tie that into the lesson today. The goal isn't to predict market moves. The goal is to develop a process for evaluating information before making decisions. So we'll start with the simple question. It's one of the first questions we asked within our series here is, what is a stock? And the answer to that, as we have there on the screen, is that a stock represents partial ownership in a company. When you buy the shares of stock, you're not just buying the symbol on the screen, you're buying ownership in a real business. And this is important to revisit because when you see headlines, oftentimes they're very much associated with the price. And the price is, of course, important. But long-term investors also focus on the businesses themselves, and oftentimes the businesses themselves and the fundamentals behind them are what drove the investing decision, not the day-to-day price movement, at least initially. So it's important to know that and remind ourselves, what does the company do? How does it make money? What are the risks that it faces? And what is it, where does it fit rather within our portfolio and our financial goals? And so, while stocks can potentially generate returns through price appreciation or in some cases dividends, neither is guaranteed, which is why understanding the business behind the stock is often more important than reacting to a headline about that stock. A simple way to think about this is headlines is going to tell you what's being talked about. Fundamentals can help explain what you actually own when it comes to some of these different businesses. So, this is coming back to the lesson of last week, which was some of these risks that are associated with stock investing. And this slide in particular gives us a useful framework for thinking about headlines. One of the first questions that us as investors, we should consider asking when we see news is, what type of risk would this fall into? So market risk is, things that affect the broader market. So this could be things like interest rates or economic conditions or geopolitical events. And all of those things can affect many different, stocks and companies and asset classes beyond stocks all at the same time. Whereas the company-specific risk relates to that particular business. So maybe it's the earnings, maybe it's a leadership change, maybe it's a product issue or something that's unique just to that business. Now, understanding the difference, although it sounds, very, kind of elementary to say this, it does actually help put the news in context. So not every headline affects every investment the same way. There's also a few additional risks that we should understand when we're making these discussions and thinking about this stuff. So firstly, firstly here on our screen is financial risk. So these are things that, make the company's ability to manage its finances and obligations more difficult or perhaps easier, and moving and the general vibes are in things surrounding that. And so as that changes, that can have an influence on the value of the company and perhaps even on your confidence in a company's ability to deliver on what your original investment thesis is. So that's an important one, but probably a little bit more specific and clear when you're discussing those type of things. Now, sector risk, I think, is an important one and also kind of falls into a gray space between company-specific risk and broad market risk that we discussed on the last slide, because this can be a type of thing that affects a range of companies, but those that have, some sort of tie together. So technology companies have different risks than airlines or retailers or healthcare companies. And that's really the kind of crux behind the concept of diversification that we discussed earlier on in this series. So when a headline catches our attention, we should try to take a second, if we can take a beat, catch our breath, and ask ourselves, what kind of risk is this highlighting? Is this something that's affecting the broader market? Is this, affecting a specific company? Or is this, something that can affect the entire industry? And sometimes a specific company's news, some sort of an earnings announcement, let's say, can actually have broader implications. If a company warns that they're seeing demand slide for their product, well, companies that sell a similar product can be impacted by that company's specific news. So these are the kind of questions that help us shift from reacting to the news emotionally or thereabouts to kind of thinking about it analytically and where this can help us shape our decision-making process from beyond that. All right, so as we go from here, we're going to start pulling up the platform to kind of go through the whole kind of process here and put it together. But let's pull up the platform to begin with. And where we've landed is just our research U.S. markets screen. And so the first things that we can do when we land here, and this is sort of where general headlines would fall. If you're just, maybe you're busy at the office all day or in class or whatever would be driving your attention elsewhere, and this is the first time you've looked at the markets for the day, this screen is going to give us a good, kind of reference point to what happened throughout today's session. And when you see, what you're going to see is the stock market was down today. And instead of being, emotionally reactive to that and worried about it, we can ask a few more questions. And one of the nice things here is it has this chart to the side, and we can kind of see that today was generally kind of a quieter day when it came to prices. There was some movement, but for the most part, we stayed well within, 1 percentage point up or down across all of the 4 major averages in the U.S. But say we wanted to, kind of put this move into context and see, we can expand the time frame. So now we have over the last week. Okay, well, it doesn't look so bad over the last week when you consider the fact that the market had generally done pretty well over the last several sessions. And the same thing can be said over the last month, and of course, even the last year. As we look, you can see more news as well, and you can see general stock market news here as we go. But let's talk about looking at specific companies, and we'll pull up Apple since that's been the one that we've used at least to begin with for much of our lessons. And so what we can see today is that Apple actually did okay. It was up about half a percentage point, and we can start looking at this and going from beyond just reacting to what we see on the screen to doing a little bit more research. So some of the things that we've learned throughout the other sessions was, kind of how can we learn about a business? Now, we already know what Apple does. We've discussed it, but company profile, of course, would give us that breakdown of what this does. We can say, okay, what has this stock done over different time frames? Well, we have the chart here, and we'll dive into that in a second. But the most important one for today's lesson is more about recent news, and has there been recent news in this stock? And as you continue to scroll down, we'll see news here on the board. And so if we go ahead and hit show more, this will take a little bit more room on our screen. And what we can see is that not only are Apple specific stories on here, but stories that mention Apple in the broader context are on here as well. Whether that's analyst updates, whether that's price target adjustments, whether that's generally news around the market and describing the price action for the day, or it could be things that are truly updates from the company. Apple reported earnings last week. When Apple reported earnings, those pieces of information show up in this screen. And so as we see that, we could go back to our chart, and we could start saying, okay, well, how have these different headlines influenced the marketplace? And so it defaults to 5 years daily here for us, but we're just going to go to the last 1 month. And what you'll see is on the Apple chart, there was a pretty dramatic move last week, and this actually was around the earnings event. And so when that happened, Apple reported earnings. The street was disappointed in what those earnings said, and you saw a dramatic move to the downside in the stock price. And when those type of things happen, looking at that news, looking at the chart can start putting things in perspective. And some of the questions that we can start asking is not shrugging off this move and saying, hey, we're a long-term investor, this doesn't change things. Is asking, does this change things? Did the things that we learned about the company change our investment thesis, or is this a short-term setback or whatever it may be? So it's not to say that short-term moves don't matter, but as we extend time, we can even just go year to date on Apple, you can see it made a difference on this chart, but it certainly doesn't dwarf the movement that we've seen. Certainly as we extend the time, go back to the 5 years, it does register, but it doesn't, it is dwarfed by the movement that we have seen. And so by looking at these different time frames and assessing things, one, we can put context to the headline. We can also start distinguishing between what is maybe temporary or a bigger trend. And, maybe you could say that, this was a significant move, but, maybe you could say in the grand scheme of the last several years, this is totally within Apple's general trading, and this completely does not change the feelings around this investment. Now, that's a question and an answer that is individual, and each person's going to have a different answer. I want to pull up a different company though. This one is fun, and not simply just because it's fun, but it's Six Flags Entertainment. Is if we didn't know what it was, we can see here on the side the company profile, amusement parks and such. But the stock was down significantly today. As you can see, $3 on this stock is 16%, and that alone is headline generating. That alone will catch your attention. And if you are an investor in this stock, that will certainly drive an emotional response. And so what I wanted to do is kind of try to go through this process with something that is moving relatively in real time. You can see on the one-day chart a pretty substantial move, and it happened all in sort of one period of time. And so when you see that, the first thing that should kind of jump out to you is that this is a headline-driven move. And never know that for sure, but as we continue to scroll down, we start to see, okay, this is a stock that reported earnings today. And based off some of the different headlines, as you dive into them, we may find that, and I looked at some of this before, but relative to expectations, Six Flags Entertainment reported a revenue for their second quarter that fell a little bit short of those expectations. And because of that, the street and investors start to lose a little bit of confidence perhaps, and they sell the investment. You see the stock goes down in price. And so this is about understanding risks, understanding the business, but also putting that news in context with what's happening on the chart. And so if we kind of take that same process that we did for Apple and extend times, we can start to see, how big of a move was this. So what I'll do is I'll take the screen a little bit bigger here. And over the last 5 years, well, it is a relatively, benign move in that context, but this hasn't really been a stock that has done impressive, in terms of its performance. And so what you may see is maybe this was on your list of names, and maybe this was a name that you, had on a watch list and you were considering, but you were waiting for some reason, some sort of catalyst or some sort of, change in the fundamentals. Could have been the earnings report that would maybe change this, extended downtrend to give you that confidence to invest in it. And perhaps today didn't actually achieve that. And so, and perhaps if you were in this investment already, it's a move lower again. Maybe this makes you kind of go back and say, is this still an investment that makes sense for the portfolio? So looking at all of that in the context isn't about making the decisions based off that earnings headline or not. It's about being informed, because knowing what's going on and understanding why something happens is important to make confident decisions and stick to the process. But also because it gives us a second to go through our process, catch our breath, slow down a little bit, and try not to make an emotionally rash decision. The same way, if this was a stock that was moving really dramatically to the upside today, one that was doing that today was Motorola Solutions. It was up 8% today. It had a nice move. The same way that fear can overtake on disappointing news, FOMO can overtake on things that move quickly to the upside. And being emotional in either direction can prove a little bit disappointing in the end. But all right, let's bring this back here and sort of wrap up with a few key takeaways. First, not every single headline requires action. Secondly, understanding the business behind the investment can help investors put that news in context. And so had we looked at Six Flags a little bit longer, we may have seen that, hey, revenue being disappointing has become a trend maybe for this company, and that still reinforces sort of the downtrend that you're seeing on the chart by that still being part of the story. Thirdly, evaluating the risk, going through sort of that framework, we're trying to bucket it into where it falls, can help investors better understand what that headline actually means. And finally, a long-term investing plan can be a valuable filter when markets become noisy. So I showed you a few of those names that have moved quite a bit today. I've showed you how Apple's moved over the recent times, and that can help us sort of navigate those environments. But that does bring us to the end here of Lesson 8 and the end of our New to Investing series. Over these 8 sessions, we've covered foundational concepts ranging from market basics and diversification to portfolio construction, risk management, and even discussing a bit sort of dealing with the emotions surrounding headlines and risks and investing. My hope is that these lessons have given you a framework and kind of a process for navigating investing with a little bit more confidence and perhaps even a little bit more discipline as well. Thanks for joining us throughout the series. I do want to show you real quick where they'll be archived in case you want to go back at any point and view these into the future. So of course you're on Schwab Trader Talks right now, so it's within this same Trader Talks webcast YouTube channel. If you go to the playlist section, you'll see New to Investing here, which is where these will be archived going into the future. Thanks again for joining us throughout this series. And if you're ready for the next step, we do encourage you to join our Stock Investing for Beginners webcast, which will be applying many of these same concepts, but in a little bit greater detail. Thanks again for joining us, and we wish you the best on your investing journey.